Housing affordability has never been worse. That shouldn't be a surprise to anybody. But I think the real question is relief coming? And then more importantly, if relief is coming, what kind of strategy should we be employing to kind of maximize that? So let's first go through this article in the Wall Street Journal, which is the math for buying a home no longer works. These charts show you why. And then we'll dive into that, whether relief is coming, because it really kind of comes at the end of this article. All right, so this is the kind of primary point and graph of the article, which really just says that to own a home, your monthly payment is going to be about 50% higher than if you were just leasing a similar property right now, where that has not been the case, as you see for, recently in the last 10 to 15 years. Why is that? Well, it's because interest rates are so high, as well as the homes themselves are extremely expensive. So this is median home price, this graph here on the right, median home price. If you see here back in 2000, about 140,000, now it's about 400,000. Just 23 years later, that's like 170% price increase. That is certainly not what inflation has done during that time. So even if you inflation adjusted this graph, it would still be pretty outrageous. Compare that to interest rates. It may not look like interest rates are that high compared to past history. However, they are similar to what they were kind of back in the 2000s. And we've seen home prices go up dramatically over that time. So here's really the impact there in this chart, which is showing that if you bought a $400,000 home at 3%, your total interest payment is $165,000 over the lifetime of the mortgage versus $525,000 in interest rates at 8%. Just this massive, massive impact. You see that in the monthly payments on this. This is interest rates at the bottom. Price of the home on the left. So we put that, I'll put a line in here for the 400,000 price point. So now at 8%, you're paying almost 3,000 a month, whereas back when they were around 3%, more like 1,700, right? That's just this massive impact for everyone. Now, this was, I think, the most interesting of the charts because there's this narrative around because homes are so expensive and interest are so high, it's very hard for new homeowners, to buy that first home. And that is the case, right? Back in 2002, first time buyers average age 31 versus 35, right? Because back in 2002, people were still complaining about, the fact that houses were not affordable because, prices had been going up so dramatically. But the real impact is here, which is repeat buyers. And you're hearing this narrative too. I just did not expect it to be this extreme. The narrative is the home we're in is so affordable. We can't imagine trying to get into a new home, right? Where maybe you're trying to move out of your kind of starter home into a little bit more spacious home, bigger family, something along those lines, because the current home is so affordable, we just can't justify buying a new home, which is part of the supply problem, which I'll kind of touch on later. 41 in 2002 to 58, right? A 17-year difference. That speaks to what's going on really in the housing market, I think, pretty dramatically. So is relief coming? We're talking about interest rates now. Yes, we see interest rates coming down, but we saw them come down here as well, and they kind of came back up. So is this trend going to continue? We're going to continue to see interest rates coming down. Well, we just got inflation news, and inflation is still kind of cooling but leveling off a little bit here. So we're seeing overall inflation kind of steady out at 3%, core steady out at 4%. What is the Fed going to do? I am of the camp that interest rates are going to start coming down because of this. Really, I think the only scenario where interest rates do not start coming down over next year is if two things happen simultaneously. One, inflation begins to start creeping up again, and the economy continues to crush it, which is just, for me, that's a hard pill to believe that we would have both of those things happening next year. In fact, I think we are going to start seeing some weakening of the economy, and that will actually expedite us bringing interest rates down. If you look at futures and kind of indicators out there, there's speculation that we should see interest rates coming down by May. Of course, that is all predicted by talking heads and people that are really just guessing that's what's going to go on. So if interest rates start coming down, the good news for if you already purchased a new home is that you should be able to refinance here in a year, 2 years to a lower rate. I wouldn't jump at the first refinance offer. If your mortgage can go from 7.5 down to 6, I'd probably wait to see if it goes down a little bit more. And then if you're one of these folks that still hasn't bought a home and is waiting for interest rates to come down, the good news is mortgage rates kind of still should be coming down. I would just be very concerned about if you have money set aside for that down payment where you have that invested. Yes, the stock market has been doing very well recently. Remember, the stock market can swing very widely in short periods. So, leaning towards something a little more conservative, bank CDs, things like that, might, yes, you may not get the returns, but you might find yourself not having to sell at a loss. If we do get some type of a small recession, a housing market downturn, something like that, you'd be happier if if prices drop, that you had that in something that was a little more conservative over the short run. So we've talked about interest rates and the impact there, but the other side of this is housing costs, right? And that's probably an equally important discussion. And this video I just recently did was on, is the housing market in a bubble? Are we expecting dramatic changes on housing prices, which is a very important follow-up video to this topic. So I hope this has been informative, and I'll talk to you soon.